right? So like I said, cost basically involves cost of packing, materials, tools, cost of containers, royalties and lines, cost of development, right? Insurance basically is any insurance policy that we take concerning the item we are importing. So insurance is insurance, right? And freight. Freight basically involves cost incurred in the transport of the goods. Cost incurred in the transport of the goods. It might include costs of shipping, even those loading, offloading, unloading, whatever. It's part of it. So loading, unloading, and stuff. It's all parts of the freight. It also costs um um if there is any transport service fee, like transport service fees, that form of fees. So service fees concerning transport. Um, so the idea is anything that is incurred concerning transport, I guess, and it also forms part of what? Transport. And then yeah, basically. So basically, these elements are what we compute our customs duty on or customs tax on. I guess, and it. So now when considering customs, what are the taxes? What are the duties? What are the levies that we consider? And that's how you work it. So take this format. So the CIF value, so you have your CIF value, like I taught you the VAT format, right? On this CIF value, your import duty is computed. So import duty is what? Import duty or custom duty is computed on the CIF what? Value, right? Import duty is computed on the CIF what? Value. So once you add it, you have your CIF plus the import, right? Now on this thing that I've done here, levies are also computed. The import levies are computed on these things. Now the levies we have the get fund levy, which you know, get fund levy, which is 2.5%. It is computed on the CIF plus the import duty. We also have the NHIL, that is 2.5%, also computed on the import plus the duty. And then we had COVID, which is no longer there, which is what 1% computed here, right? Now there is also the AU levy, African Union levy, which is 0.2%. Then there is what we call the ECOWAS levy, which is 0.5%. Right. So once you compute these levies, right, on whatever you have here. So now you have your CIF plus the levies, plus the duty, plus the levies. On this amount, import VAT is computed, right, to get the total value or the cost of the item that's you imported, right? So any question, any issue, any question? Well, at this point, we've gotten to the point where we are copying and watch the video later. Is that where we all are now?
Oh, but you said that when we finish, you send us the worksheet. So we are not writing. We are just expecting you to send it to us. Well,
That's interesting.
and we
Please
are
write.
watching.
Don't rely
Sir,
on my worksheets.
sir,
Yes,
the,
please.
the, the import duty, what should be in the I can't see. Is it GFT?
Please
No,
come again.
not this one. Can you scroll down a bit?
Yes, please. The
After the
CIF. Is it this one?
After the input duty, the total. Yeah. What's that?
CIF plus the input
Okay.
duty.
Yeah. Okay. Okay. Thank you.
Right. And please, those relying on my sending the worksheet, please, I beg. I'm begging you. All right. Beg. Okay.
Okay, okay, so please, and then let me see the last lesson, the non lesson that we calculated. I'm just taking a shot of it today.
The
The one that we did before we had the break.
as in the VAT.
The local, the lesson.
Madam, I'm letting know.
Please come again. Hey.
So he means the previous question, the solution to the previous question.
But is it the video is recorded? I think it will get to you. I don't know if you can. Or so that we hurry up and then.
So let's continue.
Yeah. I think I'm sorry about that. And one more thing. You see, sometimes the levies, so you see the CIF, normally you get your C, you get your I, you get your F, but sometimes insurance is not given. So if insurance is not given, I get in it. Where insurance is not given, and then the transport is by air. Okay. Where insurance is not given, and then so you have your CF. Where insurance is not given and then the transport is by air, please, the insurance, assume that it is 1% of the CF, that is the cost and the freight. Where the transport is by sea, assume that the insurance is 0.875% of the CF, that is the cost plus the freights. Okay. Yeah, I think that's the detail I added. So we can go ahead and then solve our question. So question 4. Please, I need somebody to help me with the reading.
Question 4. During the month of October 2024, Wyono Limited imported goods by sea. Is it freight from
Freight.
China?
Okay.
Wyono Limited is an importer of general mechanized goods for sale in Ghana. The goods imported have a cost of 10,500,000 Ghana cedis. Total freight value was 5,500,000 Ghana cedis. Wyono Limited could not provide evidence of any amount paid to insure the goods against loss or damage. As a tax expert, he has been consulted to advise on the amount of duties and taxes payable upon importation of these goods. Determine the following in line with the Customs Act and the Customs Regulation: the cost, insurance, price, value of Wyono Limited's importation. II. The amount of import duty payable, assuming the import duty rate is 20%. III. The amount of import VAT payable. IV. The amount of ECOWAS levy payable. V. The amount of African Union import levy payable. Note: Wyono Limited is not exempted from any of these levies.
All right. So cost of goods. So we have to find our CIF value, which is I, right? I can use the approach that I gave you, then you probably answer the question. So cost, is what? How much is the cost in the question? I think 10.5 million, right?
Yes,
So
10.5 million.
10,500,000. There are some questions that would probably segregate the cost into the elements I gave you. So please learn them so that you know that when I see packing, those in this way it goes, where what goes. And I think there is freight to be 5.5 million, right? Now, please, what about the insurance?
0.875 times the CLF.
Yeah, so you notice the insurance was not given in the question. So like he said, there is what we call the notional insurance. And please, the person who said 0.875, please, why 0.875?
So we process by sea.
By sea, because they said by what? Sea freight from China. So because of that, the notional insurance is 0.875% of the C plus what? F, which means this plus this. What are you getting? I think that's 16 million, right? Yes. Okay,
14.
what? So 16 million. Yeah. So please give me the value.
So 14 million.
14. Looks like 140. 14 is too small for million. So I'll say 140. But please confirm.
Oh, yeah, percent.
That's a report.
Yeah, 140,000.
140,000, right. So it means our CIF value is going to be 16,140,000. Right. So we have our CIF. So we've done I. Now II, import duty. Remember, import duty is computed on the what? The CIF value, right? So the import duty payable, assuming the import duty rate is what? 20%. So import duty is 20%. So please, what is 20% of this? This is as straightforward can be.
3,228,000.
Okay. You add this, you get your CIF plus the import duty. This is what I getting.
19,368,000.
19,368,000. Right. And now we come to our levies. We start with the get fund levy. You see, it's as simple as simple can get 2.5%. Please find 2.5% for me. NHI.
484,200.
Please come again.
484,200.
Okay. So 484,200. That's the 2.5%. 200. Which means NHI, which is also 2.5%, will give us 484,200. And then the COVID 1%.
Hello, sir.
Yes, it's Richard.
Please, are we computing it on the CIF or the total CIF plus the import duty?
I think it's on the CIF plus the import duty. Why? What are you getting?
I was thinking we are computing the levies on the CIF.
Why you got a different value from what she got?
Well, with the value, I have not checked, but the value that she's giving is like we are computing it on the total of CIF plus the import duty.
Come again.
No, so he's asking if the levies are computed on CIF or CIF plus import duty.
Oh, CIF. Why? So what are you getting? Why
Okay,
you didn't get
because
this?
these computations are on CIF plus import duty.
So I thought it's supposed to be on CIF plus duty. That's the levies. It's the
No, no.
duty rather that is on CIF, right?
Hello.
Hello, sir.
It's import on CIF, the levies on CIF, VAT on everything.
Really? Oh, okay. No, I had it wrong there.
Sir,
Okay.
Hello.
hello, sir.
So what is the value you
The
guys
figure
have?
I got 403,500.
Can we confirm it, please?
So I'm asking the levies, is it calculated on CIF plus import duties?
Yeah, and I'm saying import duty on CIF, the levies on CIF, and then VAT on all of them.
Okay.
So what are we getting, please? Is it this value or what Richard is saying?
So then our answers are wrong
So
because
these
the
What
answer
answers
was
Richard
are
is
repeated
on.
on the
saying
Yeah, what Richard was saying.
is on CIF, but this one
Oh,
that
okay.
you've written is on CIF plus duty.
Oh, okay. Well, let me add it. Sorry. So please, he's a 4 something, 40 something. Hello,
403, 500.
403,500, 403,500, right? And 1% of this looks like 193,680, right? Hey, sorry, CIF. So 161,400, right? 161,400. So please give me the total. Hey, sorry, and then the AU levy, and then the ECOWAS levy. AU is how much? Hello? Hey, can they hear me?
Yes,
AU is how much,
32,000,
please? Please come again.
32,000,
32,280.
So AU is 0.2%, right? That's what I wanted to hear. So 32,280. And then the ECOWAS is what?
8,700.
8,700.
So the AU and the ECOWAS, we calculate it on which one? The CIF and
They are all levies, so they are all treated the same.
on CIF.
Yes, please.
Okay.
Right now, I'm even starting to doubt what I'm even. Let me. I'll confirm and get back to you guys because this is.
Yes, sir. Please confirm.
I'm starting to. A minute, please.
The levies, they recharge the 15% VAT on it. Because these figures we've given you is now just the CIFO. We charge the levies on just the CIF and we excluded the levies from it.
No, come again. You say we do what?
Why don't we wait for sir's
Okay.
confirmation?
He's not
Because
here.
he is confirming. No, he's not here. He said he's
Ah,
confirming what it is.
okay.
Please, so the ECOWAS levy, the AU levy, where do you get the percentage? And then the ECOWAS levy, plus
AU levy is 0.2% of CIF. ECOWAS is 0.5% of CIF.
okay. Okay, thank you.
is 0.5.
ECOWAS is
We are waiting for
0.5
whether it's
on
on the
CAI.
we are waiting on whether it's on the CIF or it's on the CIF. That's what we are waiting on.
Mm.
I think it's the CIF on the import duty.
Anyway,
All right. Hello. Hello.
Yes, sir.
hi, sir, please, we are here.
Oh, okay. So this is actually a past question, and I think that's why it was causing my confusion. So I know it's basically everything is computed on the CIF plus the inputs, but then you see the past question when they solved it, they did it on only the CIF, which is very strange for me. That is why I think it's creating that conflict in it. So for now, please, we are doing it on the CIF plus the input duty. Okay. CIF plus. So the idea is this. You see, it follows the approach with normal VAT approach. You see, when you're dealing with something like uh what is this thing called? Communication service tax. Okay. You see, with communication service tax, everything is let's talk about a little VAT before I even continue. So remember the transaction value, something I gave you. Transaction value. So if the transaction value, let's assume is 100 cedis, the VAT is in our station. Oh. If you have communication service tax, it is normally at 5%, right? So please, 5% of 100 normally gives you basically 5, right?
Yes, please.
Yes.
Yes, please.
So normally this gives you 105, right? So now you notice you'd have your transaction value, as well as your VAT. So the transaction value plus the VAT, sorry, plus the communication service tax. This is generally speaking where there is for those firms which are in the communication service industries. Okay. So I'm trying to explain why it is the CIF plus the import duty. And then because of the past question, that's why I'm conflicted. So transaction value plus the CST. So what happens is the levies are normally computed The levies are computed under the new system. The levies are computed under a get fund is computed on the 105. That's under the new VAT system, right? 105, the 2.5% under the Act 1151. 2.5% would be computed here. NHIL would be computed. Yes, Christiana.
Sir, so would they examine us on the new one? Or you are just
I'm using it
making
to,
us
to
know?
make a point. Okay. So, like I was saying, NHIL would be computed here, and everything would be, and then okay, there's no COVID under the new system, so this is how it would have worked. But then under the old system, I hope you are following. Under the old system, if you have communication service tax, which is also another tax, so in this case, this is like the import duty here. 5 is down here, 105. But then the levies under the old system would still be computed on the 100. I guess the levies would still be computed on the 100. So basically, you would get 2.5% of 100. That gives us the 2.5. This one 2.5. So you notice under the old system, everything was computed under the CIF. Okay. Under the CIF here on the transaction value. That is the levies. But then under the new system, if you have communication service tax, please, I'm speaking for where there is communication service tax, okay? These ones would be computed on the transaction value plus the communication service tax thing, okay? So what I am trying to say right now is this. This question we are doing is a past question. And in the past question, they computed it on the CIF, okay? But then personally, I knew it to be computed to be what? CIF plus the import duty. That's what I have known all for all this while. But then the question computed is on this. So what do we do now, right now? Hello?
Hello, sir.
Yes, please.
So it's on both. It's on both the duty and then the import. That's what I know. So,
That's what you also know. Because
yeah.
so are we disputing the question and then taking what we know, or
Sir,
okay.
what I know, what I know is computed on the CIS.
That's interesting.
I think all this one it has been computed on both the duty and the CIF. It's now that they've amended, and I'm not sure ICAG will use the new one. They'll use the old one,
So,
both
so,
CIF
so
and the duty.
let's use the old one.
Which is on both CIF plus the import duty.
Yeah.
That is the old
Okay.
one, right?
Yes.
Honestly, I don't even know which one to determine. And you see, normally the old system is like VAT, is the
But
VAT
sir,
that has been changed. This is
the one we
custom.
are solving, you said it's a past question, but the solution is which year? Is it
Let me try.
recent
Let
one
me
or
see. Let me see. It's not just, it's not this year. It's not this year. It's probably somewhere last year. Let me see.
So I think it's on both too.
Okay, so me, the both is what I've known. So right now we are all making a determination right now. So what do you think we should do? But at least you guys understand what to do, right?
So yeah, it's on both, but the VAT will be calculated on the both plus all the levies.
Yeah, for that, yeah, I think we all agree with that part. They just where the
Mm.
levies are computed, that's where I think we are all complete. I think let me see. I think that's July 2025. Yes. They can confirm from there, then make your determinations. But for now, let's work it on both. Okay. Right. I've always known it to be on both. It's just this question making things weird. Guess I should have cross-checked before bringing it here. Okay, so and I think I heard somebody asking about where we got the 0.2%, and then please, those are the rates. Okay, those are the rate. Like we have 2.5, 2.5, and 1. There's a rate for the AU levy and then the ECOWAS levy. Okay. Hello.
Hi.
Hello. Everybody is as conflicted as I am right now.
Hi, we are here.
We have heard it.
That is the E plus the import duty. So
Please come
So then let's
again.
go with the pass.
Since we've
Okay, so,
written this one, let's just continue.
okay, so this is what the past question has. So basically whatever you get is what you compute your VAT amount on. Okay. So VAT, whatever you get here, then you compute your import VAT. I think we've answered most of the question. Right?
Yeah. So then the figure will change.
Come again. Oh no, that's what the past question has. So I think we okay. If we are going with the past
Oh,
question. But I've always known it to be on the CIF plus the inputs.
But
Okay.
so let's go by the past question since they have
Apparently they are
they have
into it. Okay, I think we should move on. We've done enough of customs. All right. So now I'm skipping question 5. It's also a past question. Let me give you the year so you check it out. It's also on customs. That's, I think, November 2025. Okay. So now let's do ethics. Ethics. Remember, we have ethics and fiscal policy, a whole something, 10 marks or so. Now, ethics, please, let's move from customs. Like, let's move our minds from there. Now, we are in ethics, right? So, ethics basically, in accounting, we have what we call professional ethics, right? Brought by the IFAC Code of Conduct, sorry, International Federation of Accountants, right? So basically, what we talk about when we are dealing with ethics are basically what was talked about in IFAC. And in talking about ethics, we talk about 3 major things, right? The ethical principles for accountants. So in this case, a tax accountant or a tax person. Then we have threats to those principles, threats to those principles. And then we have safeguards against those threats. So threats to the principles, then safeguards against what? The threats. Now the ethical principles, the code is topic, right? So please, quick, let's go. I'm not mentioning a word here.
Professional behavior,
Professional behavior,
objectivity,
objectivity,
professional competence, and due care.
professional competence, and due care, right?
Yeah.
And
Integrity,
integrity
confidentiality.
and confidentiality. Now the threats, the code is this. And let's go.
Familiarity.
Familiarity,
Familiarity. If
advocacy,
you use codes, it's very easy to
advocacy,
remember. Advocacy,
self-interest.
self-interest,
This is good. This is good.
self-interest,
interest,
Recommendation.
intimidation,
intimidation,
self-review.
Self-review.
and self-review. So, and then safeguard also. So safeguards, they have categorized under 3 major areas. Safeguards provided by the individual. So you yourself, safeguards you provide by yourself. Then we also have safeguards provided by the profession or by legislation. And then we have safeguards provided by the work environment. So these are the three major safeguards. Please, each of them has things under them to find them out. Right. Now, professional
You
behavior.
mentioned that
Please come again.
if the specific thing has to say,
I didn't hear what. The network, you're breaking out.
you said the feedback. I couldn't hear you.
Can anybody hear her properly so that they can read?
Can you type so we can read it out? We can't hear you.
I think she's saying
Okay,
something about
yeah,
safeguard.
I can't hear. I don't
I
know.
said the
the
last
points you made
one is
under the
it work?
safeguards, can you read them?
I'm saying we have safeguards provided by the individual, one provided by the profession or
Okay.
legislation, and then by work environment. Is that what you're asking?
Okay.
Oh, okay. Okay.
Sure.
All right. So, professional behavior. You must not do anything to discredit the profession. It gets anything that will put the profession into disrepute, right? Objectivity. You shouldn't miss personal biases or personal feelings in making decision or in your judgment as a professional. Professional competence and due care. You must demonstrate skill and knowledge in the area such that you'll be able to provide services to your clients at a high level of what knowledge and skill, right? And that's why we are even here in this class. Integrity. You must be straightforward and honest in your dealings, both professionally and personally. So just be integrous. Confidentiality. Don't disclose information you come across unless you have a legal or something right, legal or professional right to do so. That is confidentiality. Now, the threats to these ethical principles are familiarity, where the name suggests, right, you are familiar with the person or something. Probably you are related with the client or you have some form of connection with the client. Advocacy, where you are put in such a position that you must defend the client. For instance, you have to be a witness of the client in a law court. Advocacy traits, right? Self-interests, basically where you have financial or other interests in the client. Intimidation, undue influence, pressure, coercion, influencing you to probably act in favor of the client. Self-review, the tendency that you would not properly review something that you've already done. And then safeguards, please, the safeguards are not this individual professional, the safeguards are under them. Okay, so please find them. For instance, another profession, we have something like CPD, where there is a continuous professional development thing to try to update yourself. It helps with professional competence and due care, right? Also, the disciplinary commission, like board of ICAG and stuff like that to also help with disciplining us probably when we go outside of the scope. Also, work environments normally do that as well. So you can find them out, the IFA Code of Ethics. It applies to accounting and its disciplines, including tax and audit. Right, so on that note, let's enter the question.
Yeah, please, there's a question in the chat box.
Oh, okay.
Somebody has written something in the chat box.
Can you recommend that if management comply with ABC, they will be able to gain the required financial strength? That's can you suggest a solution in the report writing? Okay, so for reports, you see, those things are like essays, right? So you say you write as many as you can. If I'm writing a report, I'm sure I'll write more than probably is required. So please, you can do that. Why? Depending on how they frame the question. So I think the person is asking whether they're asking a question, can we provide a solution in the report? Yes, please. You write as much as you can whenever you're writing a report, please. Well, you
So
never
I
know what.
think the person's emphasis would be like whether the format should be a report, like you write to from those kind of things.
Yes, please do that. Do that. Yes, please.
I think that's what the person said.
So to from subject date, right?
Yeah,
Or
those things. Yeah.
yes, please do that. Use the formats for the reports, right? So please, somebody should help me read. Hello.
Section 6. A recent workshop organized by Famia and Associates, a tax practicing firm. It was echoed that a tax practitioner or tax officer of the GRA, it is absolutely important that one conducts affairs at all times in line with the professional code of ethics. It was mentioned in passing that the fundamental ethical principles in the practice of taxation are bedeviled with some threats, shaking the foundation of these ethical principles. Participants at the workshop were, however, disappointed that the organizers did not outline and explain what these threats are. You are qualified as a young tax consultant with Famia and Associates and the managing partner as tax due to prepare a presentation to be circulated to the participants who address their disappointments. Required. Prepare a report highlighting the relevant issues considered as threats to ethical principles.
Thank you. What is the answer here? Right. I mean, something like this, I write like 2 pages, even after explaining the main points. Right. So they are basically asking a report on the relevant issues considered as what? Threats to the ethical. And this, I'm sure this will give you like 10 marks. Very simple 10 marks. Right. So basically, and it's not like they even specify the case, they are like just explain it. So this one as much as you can. So it starts with a report structure. I'm not going to explain, just talking about it. So to who? The managing partner, because he tags you with the issue, right? Managing partner. Then from you, you are the young tax accountant, right? So tax accountants. Then the dates, probably whatever date it is that you are writing it. Then subjects. What type of subject would you like to give to it? Hello.
Threats to ethical principles.
Okay. So threat to ethical principles. I think it's even in the question, right? Then you talk about the threats. So you introduce yourself. What are some of the threats? Blah blah. You start familiarity, explain it, probably link it somewhat to how tax, provide an example of how it works. So familiarity, for instance, you can go, okay, it's when officers of GRA or other like tax persons, I guess, and it's become probably because of some form of personal relationship with a client or something, probably it's not coming. But due to close relationship, they become somehow what's the word they use? There's a professional word. It's not really professional, but they use it a lot. Yes, sympathetic. Good. They become somehow sympathetic to clients because of personal relationship they might have with them, such that their decision on activities of the client become impaired. So you start something like that, you continue and stuff like that. Okay, so basically ethics. So please go and learn them. I know you learned it under audits, PSA, FR, but please learn them again. Very, very important. Okay. Any issue? Can we move on? Any issue? Any question? All right. So taxation of trust. I'm starting to get tired. So then let's enter the question. I think I'll talk about trust as we are going along. Does somebody should read the question so we hurry up. Trust.
Mr. Fabna Ojam, at his death, left his estate in the hands of non-resident trustees in favor of his 3 children, Janwa, Preko, and Ajiman. The following information was made available by the trustees in respect of the estate at the end of December 2024. We have rental income, trading income, interest income, income from a transport business, and gifts received from friends and family of Mr. Kobnojam. Additional information I. The interest received as income is from GBC Bank PLC on the trustee's bank account. Interest payment to GT Bank on debt or loan repayment is 400,000 Ghana cedis. Each beneficiary is entitled to a 25% share of the net distributable income. Fixed annuity at each beneficiary is 600,000 gross amount. Trustees' remuneration per trust deed. We have the fixed remuneration of 150,000 and 10% of chargeable income. VI, administrative and other expenses were 800,000 Ghana cedis. VII, the trust deed allows the trustees to make discretionary payments to the three children as follows. Janwa, 250,000 Ghana cedis. Sir, please can you scroll?
Oh, okay.
So the three deeds allow the trustees to make discretionary payments to the three children as follows. January 250,000 Ghana cedis, Prep 150,000, and Ajaman 100,000 Ghana cedis. Capital allowance agreed with GRA authority was 500,000 Ghana cedis. Required, compute the income tax payable by the trustees on the trust income. II, determine the amount due to each beneficiary.
All right. So generally, trusts, the concept of trust is this. One party, normally the settler, right? So let's assume party A, normally called the settler, um, probably has a property, right? And then he decides to probably, let me use a practical example. Let's assume A is a grandfather, a settler. Now he's about probably passing on. And because he has a lot of grandchildren, let's say he has grandchildren B, C, and then what? D. He decides to, because probably he feels these grandchildren would probably fight over the properties he may have. What A decides to do is he goes to T to help him or keep his properties in trust for his children here. So basically, A goes to T to keep the properties in trust for the children here, basically to manage the property, invest it, use it to earn income. Those incomes are then probably shared to B, C, and then D as and when, okay? So A normally is called a settler. This T who is managing the property is called a trustee, right? And then these B, C, and D who are benefiting from the trust are called beneficiaries. So the whole relationship is a trust relationship, right? Now, this trust relationship is normally treated as a separate what? Institution. So trust is normally treated as a what? A separate institution, which means that assets owned or liabilities owed by the trusts, right, are treated as owned by the trust and not any other person. So assets of the trust are for the trust, liabilities of the trust are for the what? The trusts. The trusts are treated as separate what? Institutions on their own. They are treated as separate institutions on their own, which means the basic approach to calculating the chargeable income of institutions also applies here, right? And generally, trusts are also charged at a rate of what? 25%. Now, if it happens that some distributions on the income are made to beneficiaries, where the trust is a resident trust, resident trust, you know what a resident trust is, right? Residents and non-residents. I think we have residents, individual, company, partnership trust. So where the trust is resident, the distributions to the beneficiaries are what? Exempt. Where the trust is a non-resident one, the distributions to the beneficiaries are included in the income of the beneficiaries and then what? Taxed. Okay, so where the trust is a resident one, distributions to the beneficiaries are exempt. But where the trust is a non-resident trust, distributions are included in the income of the beneficiaries and then what's taxed. So per the question, we have to compute the income tax payable of the trust. As simple as you are looking at it. So let's just go ahead and then start. Oh, sorry. So we have computation of the charge tax payable. Year of assessments. I really don't like writing it, but anyway. So for 2024 year of assessments, basis period would be January 1st to December 31st, 2024. Right? So same approach. I'm even tempted to skip the business income tax question, but same approach. So we have rental income, right? From the question, income from the trust. So basically we are computing income. Now the principle of tax is always simple. How much income are you earning? What deductions are you allowed? Deduct it, whatever you get is called chargeable income. Calculate your tax on it. It's as simple as that. So let's do the income element. So rental income. I think rental income is 8 million. Next one, I think we have trading income.
Yes, sir.
Also, yes, please.
No, you said trade is 8 million. I said yes, sir.
Oh, okay. Thank you
Yeah.
for responding. Here's have interest income. Now note, interest, anytime they mention interest, we're thinking about this thing. What is the withholding tax on interest? Hello.
Hello,
What?
sir.
Yes, please.
8%.
8%.
8%, right? So
Yes.
interest income is 8%. Let's note it, put it down. We talk about it. 1.4 million.
Mm.
We also have gifts received from so gifts received. So the trust also received gifts from the friends of the deceased, also included. So that's 1 million. Right. Now let's look at the additional information. It says the interest received is from GCB Bank PLC on the trustee bank accounts. Interest
So,
received is
so
from
please, the income from a transport business is not part.
where is it? Hey, sorry. Uh, I skipped it as a mistake, guys. Sorry. So income from transport business income. That's also 1420123. Right. So let's add everything. Please help me add everything.
So please 17,820,000.
17,820,000. Right. Now remember the interest, right? Because it has a withholding tax of 8%, right? That full amount is included here. So we have to gross it up. I hope you are following me. So we have to gross it up. So if we have this interest amount being here, with the assumption that it is net, so grossing up that element. Now, sometimes these things are vague, but let me make a point here. You see, they said something here. Interest income, 1,400. They didn't note whether it's gross or net. So sometimes you don't know whether to make that grossing up or netting up. You get what I'm saying, right? Now, they've also made a statement that interest received, that's the interest income, is from what GCB Bank PLC on the trustees' what bank accounts.
Bank account.
Come again.
Oh, please go on.
Yeah, so I'm trying to say that the question, though, noted it here, but then it's not really clear as whether the interest amount is still you get it.
Yeah.
Yes, but I'm trying to say I don't think they would also bring something in an additional information and then expect you to ignore it. Like there are things you ignore, but then something like this always do something. Okay. So my point is let's gross the interest income up. It's like I'm talking plenty. Let's gross it up. So basically, if interest is 8%, right? Interest is subject to a withholding tax of 8%. It means this amount here is representing 92%, right? So if the 92% is equal to the 1,400, how much is the 8%? It will be what? Less. If less, small divide. So basically 8% over 92 times 1,400. So let's add our withholding tax to it, which is 8 over 92 times 1,000. So 1.4 million. Please, what are you getting? Whenever I do ratio of a question, I always say it's not tax, it is math. So
121,739.1.
0.1. Okay. So please let's add it so that we know the income we have. I think I can do this on 17941 7.
739.1.
Right. Then can we less our expenses, right? The deductions that are allowed. So we less the expenses. So let's see. Interest payment to GT Bank. So interest that we paid. It's an expense. Interest paid. So let's see. That's 400,000. Each beneficiary is entitled to 25% share of the net distributable income. We'll come back to it. Fixed annuity to each beneficiary is 600,000 Ghana cedis. So fixed annuity. I remember they said it is to each beneficiary. How many beneficiaries do you have?
3.
3. Okay, so times 3. So basically 1.8 million. All right. And then there is also trustees remuneration. Per the trust deed, they are to pay him a fixed remuneration as well as 10% of the chargeable income, right? So let's less the fixed remuneration. We'll come and less the chargeable because we haven't found the chargeable income yet. So fixed remuneration for the trustee, that's the one managing the trust. He gets 150,000 here, right? And then also, let's see, admin expenses. That is 800,000. What is the next one? The trust deed allows the trustee to make discretionary payments to the 3 children. So the trustee can choose to make some payments to the children. I guess in it. So it's at the discretion of the trustee. So it happens that there is that the payments were made, right? Of 250,000 to Jawa. This one gets this one gets that. So the discretionary payments. Please give me the total discretionary payments.
500,000.
Okay, so let me add this like this. So 250. Please, next time when you are doing it yourself, to extend your marks, right, for each of them. Always try to maximize your marks as much as possible. So 500,000. Right. And then what is the next item? Yeah, capital allowance. Okay. Allowance is also 500,000. So please help me with the total.
4,150,000.
4,150,000.
Please come again.
4,150,000.
4,150,000. Somebody also said five something.
No, it's the same.
You also
The
have
the
4 million.
the fixed annuity, is it 600,000 times 3?
Yes, please.
But I said, what is the 3?
Based on the number of beneficiaries.
Oh, okay, sir. All right.
Okay. So please give me the value again.
4,150,000 Ghana cedis.
So 4,150,000 Ghana cedis. So let's less it from the total income, which is this value. Bring my commas.
Second, 1, 7, 7. Can you see the
Okay.
income again?
Okay. Can you see it?
Okay, 17,940. What's the that?
Please, the answer will be 1379
1379
1739.1.
1739.1. Okay. Right. And I remember the remuneration, 10% of chargeable income, right? So that remuneration, we have to also less it. It's an allowable expense, which is 10% of this amount. So please, 10% of this, I think that's 1379173.9, right? So it's here.
Yes.
All right. So please give me the difference. That will be the actual chargeable income.
Please, 1241
1241
2565
2565
.919 or 2.2.
point. Okay. So this is the chargeable income. And remember, they are taxed at 25%. So what are we getting, please?
3,103,000.
3,103,141.
141.
141.3.
Yeah, 0.3.
Right. And then remember the withholding tax, that's the interest part. Because interest withholding, once you pay it, you have to be allowed the tax credits, right? What was the withholding tax on the interest? The interest fee, the tax paid was, what am I even doing? Yeah, the tax is the 121,739.1. So you less that one. Whatever you get is the amount available for distribution. So whatever you get will be distributed to, or is the amount that is available to be distributed to the beneficiaries. Please give me the value.
We can't see the far end. The calculation.
You can't see the figures.
No, yeah. It has shifted to
Hey,
the
really?
withholding tax like 12173. I can't see the rest.
Hey, really?
739.10.
Still, you can so
I
739.
can see now.
Oh, okay.
So please, 281
Please come again.
2981
2981
402.2.
point 2. Right. So this is the amount available for distribution. This is the amount available for what? Distribution. This would be the amount available for distribution. So now if they ask you to determine the amount due to each beneficiary, all you have to do is divide this amount by what? 3, right? You get it? Hello.
Yes.
Then also the discretionary payment to here. You see, they said that the trustee also has the option to make discretionary payments. So once you divide this by 3, you add these ones to each person, right? And then
Hello,
I
sir.
think, yes, please.
The amount available, 2.9. I think it should be the tax, the withholding tax, and then the tax at 25. That will be subtracted from the 12 million amount. That will be the one available for distribution, or how?
Hello.
So it's chargeable income minus tax minus withholding tax.
So the 2.9, I think is,
Hey, sorry, you.
yes, sir.
Thank you. Sorry. This tax, right?
Hmm.
Hey. So this is actually the tax payable. Hey. Hey, wait, sorry. Thank you very much. I didn't see your name, but thank you. Tax payable. So basically the amount for distribution, let me even write it properly so that so amount for distribution would be equal to basically there's a chargeable income. So 12,412,565.2 minus the tax at 25%, which is what? 3,103,141 point what? 3. This is the total tax payable. So you less it from this, right? And then what are we getting? Hello.
I see.
Please, what are we getting?
Getting 9,131,163.
431. Hey, somebody is saying no. Please. Is it?
163. Not for 163.
Oh, okay. Points. This is like points.
9,000,000.2.
So the point is this amount will be distributed in addition to the discretionary payments, as well as there was something about an annuity. Yeah, fixed annuity as well, 600,000. So 600,000 each. Then the discretionary payment as well as the amounts to be distributed would go for each beneficiary. I'm very tired. Goodness. So basically, this is trust. Okay. And the second question 2 is also pretty similar. So you can use the same approach to try to solve it. And then business income tax. we are supposed to do this, but honestly, what I'm going to do is I'm going to try to give a summary of business income tax because we've done tons and tons of it. Okay, so I'll just try and give a synopsis of what it is about, and then I think we'll call it a night. I think that would be fair, right? Any question before I start? Any question? Any issue? And business income, once we talk about business income, like I said, the approach is what is the income that is supposed to be included? What is the amount allowed as a deduction? What is the chargeable income times what? You compute your tax. That's the basic approach. So now we are going to take this part and talk about it. Now, when we say business income basically constitutes an amount or income of a person from what? Engaging in business activities, right? And the act says if you are computing the income of a person, you must contribute such things as fees for services, consideration received in respect of what? Trading stock. Like when you sell the items you are selling, the consideration you get is part of your income. If you sell any depreciable assets, excess from the sale, excess proceeds from the sale is part. Gift received by a person in respect of the business is part. Anything, right? But then there's also things that are excluded from your income. So exclusions from income. The first one is exempt amounts. Exempt amounts under section 7. Exempt amounts under section 7. They are often excluded from what? Income. So you can go and check out section 7 of Act 896. They are often what? Exempt. An example is like a salary, gratuity, or annuity to the president, among other things. So the exempt amounts under section 7 are not included in business income. Also, final withholding payments are not included in business income. Right. Now deductions. Now deductions, basically not everything is allowed as a deduction from income. Are you getting it? So basically deductions are classified into about 3 or 4 major types. They are basically governed by 3 or 4 major rules. You have the general deduction rule, which is under section 8. We have the residual deduction rule, which is under section 9. And we have specific deduction rules.
Osundo.
Hey, Christiana. Specific deduction rules, which ranges from section 10 to section 17. Right? And then, yeah, pretty much, yes. Yeah, I think so. And then we also have domestic and excluded expenditures. So basically, these are the major deduction rules. Now, the general deduction rule talks about the Commissioner General not allowing a deduction for the purpose of ascertaining the income. So basically, generally, the idea is generally, deductions are not what? Allowed. Generally, right? Unless there are certain rules that allow deductions to what? Allowed. And then they also talk about the Commissioner General not allowing a deduction for domestic. So let me cancel this one. So the Commissioner General not allowing a deduction for domestic and excluded expenditures. Oh. All right. So the Commissioner General not allowing deductions for domestic and then what? Excluded expenditures. right? And then residual deduction rule. Residual deduction rule says that you can deduct an expense provided that that expense meets provided that that expense meets what we call the when criteria. That's what I call it, the when criteria. In other words, the expense should be wholly, exclusively, or necessarily incurred for the purpose of producing business income. The expense should be wholly, exclusively, or necessarily incurred for the purpose of producing business income, right? So wholly basically means the expense must be entirely for the purpose of the business. Exclusively means it should be solely used to what? Generate income. And necessarily means it must be essential or unavoidable in the running of the business. The expense should be such that without it, you couldn't have run your business smoothly, okay? And then we have specific deduction rules. Specific deduction rules. Like I said, it ranges from section 10 through to what? 17. So section 10 talks about interest. Section 10 talks about interest. That's normal interest on borrowing. Saying that it says that interest, right, on amounts borrowed can only be deducted to the extent that the amounts that were borrowed is used in the production of business income. So you can't go and take your loan personally and say you're coming to deduct the interest. The interest that you can deduct should be interest on amounts used in the production of what? Income. For instance, you borrow money to go and probably purchase an asset that you use to produce. It means interest on that amount is what? Deductible, right? Then section 11 talks about trading stock. Trading stock. So trading stock basically shows what we should or what is allowable as what deduction under trading stock. And it is normally what we know in accounting. Opening stock, add purchases, less closing stock. The value you get, which is the cost of sales, right, is what is allowed as a deduction. So opening stock, add purchases, less closing stock. Now the Act also normally defines opening stock to be the same as the value of closing stock from the previous year. Opening stock to be the same as value of closing stock from the previous year. While purchases is purchases during the year, right? And then closing stock is measured using the lower of the costs and then what's market value. Accountants will say lower of cost and net realizable value under IAS 2, right? I hope I have my accounting correct. And then section 12 basically talks about repairs and improvements. So 10 talks about how much interest you can deduct, provided that the loan was used for the purpose of producing income. 12 talks about how much of the value of trading stock you can deduct, and I've given you the approach. Section 12 talks about repairs and improvements. Repairs and improvements. So repairs and improvement basically saying that you deduct repairs and improvements where it meets section 9 subsection 1. And do you know what section 9 subsection 1 talks about? The when criteria. So you deduct repairs and improvements provided that that expense was incurred wholly, exclusively, or necessarily for the purpose of what? Producing business income. Right? But then they are saying that despite this one, in spite of this, the amount of repairs and improvement that you can deduct shall not exceed 5% So the amount deductible shall not exceed. So they are saying that generally you can deduct repairs and improvement if it is wholly, exclusively, or necessarily incurred. But then the amount that you can deduct shall not exceed 5% of the written down value of the pool at the end of the year. And then the excess, right? The excess will probably be included, which means the excess is going to be included in what? Income, and then what? Tax, right? Okay. Sorry, it's added to the depreciation base. That was a mistake. And please, I hope you guys are following. It's like I'm talking to myself. Are you with me?
Yes.
Oh, okay, nice. Thank you. Your mama beans. Okay. So next one, section 13. Section 13 normally talks about R&D, that is research and development expenditure. Section 13 also says that you can deduct R&D if it meets section 9. If it meets section 9, subsection 1, that is, it meets what? The when criteria. Remember, petroleum, R&D is not deductible. Petroleum, under petroleum and mining, R&D is not deductible, irrespective of section 13 of Act 896. It is not what? Deductible under petroleum, right? And section 14 talks about capital allowance, which we all know too much about. We know possibly too much about it. Every person writing C knows about business income tax and capital allowance. It's for that those two topics, it's just about practice. And then section 15. Section 15 talks about losses and unrealization of assets. Losses on realization of assets and liabilities. So basically, loss on realization of assets are or losses are deducted to the extent that the assets were used in producing what? Business income. So losses are deducted to the extent that so you don't go and incur your personal loss from a personal something when you bring it to the business. Losses are deducted to the extent that the asset or liability was used in producing what? Business income. That is the criteria for the deduction of loss on realization of what? Assets or liabilities. Section 16 talks about the limitation on the deduction of financial costs. And this financial cost we are talking about does not include interest under section 10. So it does not include the normal interest on borrowing that we talked about here. This one here. Oh, my touchpad has an issue. This interest is not under the scope of section 16. Okay, let me go back. So section 16, limitation on the deduction of what? Financial cost. Limitation on the deduction of financial cost. Now it says that the amount of financial cost other than interest. So basically it can be financial cost from hedging or anything. The idea is it shouldn't be from interest. So the amount of financial costs that can be deducted shall not exceed the sum of 50% of adjusted shareable income. And what's the financial gain? So it means the amount of financial costs you can deduct shall not exceed the amount of 50% of the adjusted chargeable income plus the what? Financial gain. And when we say adjusted chargeable income, we mean chargeable income computed. Chargeable income computed without deducting the financial cost in question. So which means we will no longer deduct the financial question, we will add it back without deducting the financial costs or adding the financial gain. So it means we'll reverse it and then we'll do 50% of the adjusted chargeable income. Then we'll add our financial gain. Whatever we get is the maximum allowable deduction on what? Financial costs. Remember, this one does not apply. Section 16 is different under petroleum and mine and natural resource taxation. It's different under petroleum and mining. What is the amount of allowable deduction? They said that financial costs under petroleum, please, that is allowed as a deduction shall not exceed the amount of what? Financial gain included. So the financial cost you can deduct is either going to be less than or equal to the financial gain. It cannot exceed what? The financial gain, right? And then section 17 talks about the unrelieved loss. That's a carryover of losses, where we know it used to be priority and then non-priority. Non-priority gets 3 years, priority gets what? 5 years. But now they've changed it. Everybody is allowed to carry over unrelieved losses for what? 5 years. And losses are carried over in the order in which they were incurred. Right. So now domestic and excluded expenditures. We all know domestic and excluded expenditures, right? Domestic expenditures are expenditures incurred to maintain an individual. For instance, the provision of food, shelter, and those things. And also expenditure incurred in commuting an individual from home, basically transport to commute an individual from what? From home. Also, expenditure incurred in clothing, yes, clothing. And then we also have excluded expenditure, which we all know. Tax that you've already paid is excluded. Sorry, tax payable is excluded expenditure. You don't allow it as a deduction. Bribes and bribes, like, and any other expenditure you incur, like corrupt practices are not included. Yeah, pretty much, among other things, right? If you breach any law or anything, the interest or penalties you pay, they are all excluded. Other things are also allowed as deductions. If you make a contribution to a worthwhile cause, please go and learn this thing. I don't know why this sitting, I keep saying it. Yes, I haven't really entered it. Charitable organizations. So contribution to a charitable organization is an example of a contribution to a worthwhile cause. Also allowable as a deduction. I think it's under section 100 or section 9. So check from section 97 through to section 900. Then you'll find these things there. Yeah, pretty much. Let me think. Let's see. Yeah, I think that's quite a comprehensive summary. Any question? Any issue? Hello, or is everybody asleep on me? Hello.
We can hear you. You're on course.
Yeah. I'm done. I'm done actually. So any question, any issue, anybody wants to cry, anybody wants to laugh, anybody wants to, because I'm saying bye-bye to you and wishing you the best at this point. Any issue? All right, so let me stop the recording and then advice. Go through the past questions, very important. Work on your speed, very, very important.